Good evening, traders, and welcome to our strategy session today. We want to cover stochastic oscillator on 4 hours. With me is my colleague Zainab. Hey, Zainab.
Hi, Matthew. How are you? Hi,
Doing good.
traders. Good evening. Hope you had a good day. Yes. So today we'll be looking at
hope so,
yeah. So today we'll be looking at stochastic oscillator on a 4-hour time frame. So hope you traders you had a good evening. So let's start. What is a stochastic oscillator? So stochastic oscillator is a momentum indicator that foreshadows reversal. We have percentage K is the slow stochastic oscillator, and percentage D is the fast stochastic oscillator. So the indicator is used in a trend or a ranging market. So should the price trade near the support with an oversold stochastic oscillator, look for a break above 20 to signal an upturn and successful support with reversal candlestick confirmation. So stochastic is also used sometimes to identify if the price of a security is overbought or oversold. So it oscillates between 0 to 100. So should the price trade near the resistance with an overbought stochastic oscillator, look for a break above below 80 to signal a downturn and successful resistance with reversal candlestick confirmation. So we'll be using the percentage K and the percentage D.
Yeah, sure. I think there's a little bit of a mistake there. Yeah, it should be below. I think it should be below 80.
Below 80, yeah.
Yeah, a typo error.
Yeah. So let's look at example on the chart, and Matthew will take us through the chart.
Right. Thanks for that, Zain.
Yes.
It's just a straightforward indicator, and we want to look at the strategy. So something I want to mention is the stochastic oscillator mostly will use the range or a trend signaling the reversal. So I'll start with New Zealand yen. And here you have a stochastic oscillator. So what traders need to look for is the market trend. And when you're looking at the market trend, you either use the trend lines or you can use a moving average. So the stochastic oscillator will show overbought or oversold situations which are aligning with when the price is touching the resistance or the support or the upper and lower limits of the trend. For instance, this is New Zealand yen on 4 hours. So if you look at the levels where the price is turning, for example, at that part which I'm marking with red, at that point, you realize that if you check on the stochastic oscillator at the bottom, you also see that it was at the oversold level. So it is believed that at this point, the momentum of the price was really to the downside, but then it's starting changing to the upside. So when these two scenarios coincide, then you want to focus on whether the price gets strong support at that level and then look at the reversal candlesticks. So other areas on the chart where we can find the same setup, if you just move along that trend, you realize we had another touch there. And again, on our stochastic oscillator at the bottom, we also had a very strong, we had an oversold at that point and it crossed above 20. So the final thing you want to look at once the oversold and the price testing the support happens, you want to consider the candlestick patterns at that specific area, they should signal a reversal. So at this specific area, you won't focus on the candlestick patterns. What you're looking for is a decrease in momentum to the downside, and then an increasing momentum to the upside with the candlesticks. And focusing at this point, you see we have candlesticks showing indecision with rejections from the bottom. And then you have strong bullish candlestick that actually engulfs the several other candlesticks that were showing low momentum. And after that, you can see the price shifted to a strong upward move. And this gave close to around several hundreds of pips. Like it was mentioned before, this oscillator will work mostly on ranges. So once you get a trade, once you spot a nice trade or a high probability setup, then your target is going to be all the way to the top of the range. And that's why you have that big move. That's the reason why we're looking at 4 hours, because a higher time frame confirmation gives a stronger run. It drives the momentum. It drives a stronger wave as compared to a lower time frame confirmation. Along the same trend, and that's currently happening. So let's focus on the next point where the price touched the support of that channel we're seeing on New Zealand yen. And on the lower side, look at the stochastic at the oversold level at that area. And I would want to highlight something as we're looking at this area. It is possible to have the stochastic stay on the oversold level or on those extreme levels for so long, longer than the price is turning to the downside. This should tell us that anytime you're using the oversold level, it should be coinciding or should be in confluence with a strong support level that is signaling a reversal. So at this point, again, the same conditions for our long position. We have the price testing this trend, and this is the support we have. And then on the stochastic, we have the price lifting off the oversold level, crossed above the 20 to the upside. And now the last thing we are considering here is loss of momentum to the downside. And there is a rejection candlestick, again, bullish rejection candlestick. And there is that strong bullish candlestick that engulfs several other candlesticks that were of low momentum. And right after that, we had a very strong bullish momentum or bullish move to the upside. Seems to be exhausted at that point, but we still expect that it might keep on going higher and higher as our target is at the top of the range. That is an example for the bullish setups. Let's jump on to another instrument where we can identify selling opportunities. Even on this one, you can identify selling opportunities right at the top of the range on this upward channel. If we shift to the upside, still you can find them, but I would prefer we look on a different instrument, as this strategy can work on any instrument. What you need to do is test it sufficiently so you can know how to use it. So here we are on a pound Australian dollar. Let's identify the ranges on 4 hours. And this is really clear. We have the peaks here showing a strong uptrend. And we want to see whether you could have used a stochastic oscillator to find those moves or those entries. So right at the points where you have the price reversing to the downside aggressively, let's check our stochastic oscillator and see what we could have picked or whether it could have helped us to get those signals. I will still use the circles to mark these parts. So that is one touch or resistance level. We had a strong move to the downside. If we check on the stochastic oscillator down there, also we see that the price was on the overbought zone so for quite some time. So when you have the price remaining on the overbought zone for quite some time, you want to look for a loss of momentum. Yeah. So in this case, you want to look at it in terms of divergence. And you consider the highs or the highs of the price. I'll use a different tool to mark the highs. So let me use this line. So you can see we have these two highs here. On the side of the price, I'm marking with blue. So the price is pushing higher and higher around this area. Well, if you look at the stochastic oscillator at the bottom, the peaks of that oscillator are showing that the momentum is reducing. And this is a divergence right here. And you realize that once the stochastic broke below 80 to the downside, and then you have a reversal pattern, a candlestick reversal pattern, where you're looking at the loss of momentum. There's a little bit of a rejection, right? There's momentum to the downside. You have a candlestick which engulfs the candlestick which shows the rejection. You have one that engulfs, right? And this one signals start of a trend, a very strong move. Okay, a very strong reversal to the downside, not a trend, sorry. Very strong reversal to the downside. Okay, this could have been a good scalping opportunity. So divergences will show where the momentum of the price or the movement of the price is not really in line with the momentum of the price. Yeah, remember the stochastic will help the traders to see the speed of the price and also the momentum. Now moving to the second point here, we see again at this resistance level, we have the price touching that level. And on the stochastic as well, we have it moving to the overbought area and also pulling back again below 80. So what we're looking for is a strong resistance at this trend level and a confirmation to the downside with a reversal candlestick pattern. And in this case, you can see there was a reduction of the momentum to the upside. We have stronger candlesticks pushing downwards and weaker candlesticks pushing upwards with a little bit of rejection. And that candlestick right there confirmed a downward move with the stochastic moving from the overbought to the downside. And just check the strong downward move that you had in this case. considering this is a 4-hour time frame, then someone could have gotten that downward move up to 470 pips for quite some time since that one started. That was since 1st of June, and it seems the run ended at around 7th of June. That was quite a run that if you get as a trader, you really feel happy. And that's the essence of catching the entry from a higher time frame. Let's still keep on searching for other opportunities. At this point here, was not quite reliable because you see it didn't really test the level, but again, it gave a small downward move. So we want to consider the next touch there. We're looking at the best case scenarios that you have. Remember, there's no one strategy which gives you 100% surety that you'll be that you'll turn into a profit. Look at that. Again, I can see divergence at that point. So let me use the lines. Let me use a different tool to mark. You see here we have kind of an upward channel, and if you look at the upper side, we have price making highs every single time. When you look at the stochastic on the lower side, you realize that the momentum seems to be reducing. What happens after that? Of course, after the candlesticks confirms the downside, and of course, what you see is a bearish confirmation to the downside. There was a pin by which almost gave a very strong fake out here. That's the essence of observing the market from higher time frame. If someone was looking at this pin bar at this point, this pin bar at this point could have been showing a strong reversal to the upside. But if you're looking at 4 hours, you realize that it is just a fake out. And then we have another strong candlestick to the downside, which coincides with when the price, when the stochastic is moving from the overbought area, breaking below the 80 level. And there's quite a big move to the downside. It might seem a small move on the chart, but it's really a very big move. A 200 pip move is a big move, depending with the size of the trade which you have. And at the moment, you can see still the upward momentum is not quite strong, has not been able to attain the levels that were there before. And seems we're getting a confirmation to the downside as well with the stochastic oscillator moving below 80. So if, for example, you were to take a trade using the stochastic oscillator with this example here, yeah, with this candlestick that is engulfing the last 3 bullish candlesticks, which are showing reduced momentum to the upside, and still considering other aspects where you might be, or where you might see we have support turning to resistance, then traders would usually maybe take a short position. In this case, short position, set your order there, have your stop loss at that point, right? And target the low of the market, the low of that range at that level. Since you realize that that is the range that is giving us oversold levels. Remember, there's no one strategy which is 100% assured of giving you profits, but it has a high probability of giving you the profits. And that is the setup for stochastic oscillator on 4 hours. Unless if you have any questions or you have something to add onto this one, Zain.
Yes, thank you so much, Matthew. It was a quite good presentation, and I think there's no question from the viewers. Hi, Felix. So guys, if you have any questions, we'll be looking at the question in the next few minutes, or even now, if you have them, drop them as we are concluding the session.
Yeah.
So
Then do you think, because again, I also think as we're looking for the setups on higher time frames, what do you think of trying to find setups even on lower time frames where you get this signal from higher time frame, confirm on lower time frame? Is it don't you think it's a good one as
it's
well?
a
I'm
good
thinking
idea.
something
It's
you
a
can
good
consider.
idea. It's a good idea, especially if you can look at you can analyze using the higher time frame and make your entries using a lower time frame.
Exactly.
So I think that's a good idea.
Yeah, so that someone gets even a better stop loss level. For example, if we went to maybe down to 1 hour on that trade which you've entered right now, could have gotten that setup quite earlier.
Yeah. Yes.
Went to maybe 15 minutes. Could have gotten the setup quite earlier and maybe up for a bigger run.
Yes, Matthew. So I don't think there's any questions from our viewers.
Yeah, seems maybe it was very clear. Maybe.
Yeah, they have understood.
Maybe it was very clear. Yeah.
Yeah, so we have one question from Peter.
Oh,
so hello, what parameters did you use to set the stochastic?
Right, that's a good question. The stochastic which I have here is, let me just open this setup. So what I have here, the setup I have for the stochastic is 14 for the percentage K period, and I'm doing 3 for the percentage D period and slowing. So let me explain a little bit on what that percentage K period is and the percentage D period. You see, the 14 period percentage K uses the most recent close prices and the highest high, right? Recent close the highest high for the last 14 periods. That's if you're in 4 hours, the last 14 candlesticks. And once you get that average, then you have that line. In our case, that line is light green. So percentage D period is like the moving average. Yeah, it's the moving average for that 14 K period. Yeah. So in this case, once you see this crossover to the downside, that one gives you the signal. But then your question was, what parameters did I use? I have set 14 K period just to remain as the default one, but then I have changed percentage D period because I want this stochastic to be less noisy. If, for example, I have this percentage D period as 8, let's see what happens. You will have it being very slow. Okay, before you get that crossover, it's quite some time, but you can work on it and see whether it's something which can work for you. If I go back again and set that one as 3, I'll have the line a little bit more sensitive. It's crossing. We have the crossover to the upside, crossover to the downside much earlier than when you set bigger moving average, or you smooth the price, you smooth the 14K period so much. So this is something I've tested. Personally, I like using that one. I would want to get the signals much faster, but traders can trick. Remember, you can trick this one the way you want. I use, for example, 10 in this case. You will have your signal coming in a little bit late, right? Maybe you can have it that way. So you can get your signals with much more confirmation. But that's why I have the parameters as 14 and 33. So I've held the 14 as the default one. Yeah. And then I've put the percentage T period as 3 to make it a little bit faster, right? And I'm able to get my signals much faster. I hope that one is much clear, Peter Mwangi. How you determine these parameters? Sometimes you want to tweak them to suit your way of trading, but the interpretation is the same. You want to get the crossover, right? And you want to get something smooth to avoid the noise. I hope that one is clear, Peter. And thank you. Thank you.
Thank you so much, Matthew. No, any other question?
Yeah, I don't see any other question. This is really a very simple approach. Yeah, especially if someone is using it from a higher time frame, like 4 hours, the trades are as clear as day. This one does not mean that they will work all the time. There are days that the market will be irrational to whatever seems rational to you as a trader, and it can remain so as long as it can. Remember, for us, we're just trying to interpret the movements in the charts and not really make the market. So in case it doesn't move the way you were expecting as a trader, you get out with a loss, but of course a smaller loss, because we are risk managers as traders. We don't fear the risk though. So if you don't have any question, I think we can call it a session up to that point. Traders, remember to send us your questions as well through the chat, and we can always respond to you. Yeah, if you want to discuss more about these strategies, we cover them every single day. We are always in our education centers. Me, I'm in Nakuru. My colleague here, Zainab, is in Isli. Yeah.
Al-Mukarram Shopping Mall.
Yeah. Also, we have our colleague Sam at Eldoret Mall.
Yes, Thika, we have Roberts.
Exactly.
And Kitengela, we have Michael.
And at our main office here in Nairobi, we have Edwin.
Yes, thank you so much, guys.
Yeah.
And have a good evening.
Thank you so much. Have a good evening as well from my end. Thank you.